Okay, what is going on, guys? Welcome into Stock Talk with Nico Kritikos. Today, we're going to be talking about Plug Power Stock. This is ticker PLUG. Today, the stock is up 20% and still rising. And this stock has had a really bad year. It's down 62%. Just a couple years ago, this stock traded all the way up to $66 a share, and it's fallen quite a bit since then. So, the big news today is that they didn't have any crazy breakthrough or anything. All they have is a new opportunity through an Amazon data house or something. And the data house needs more power. So it's a chance for them to make more money. That's really all that's happening. But if we're going to look at this company's financials and consider investing into it, the first thing I want to look at is, are they growing? And so they've done a great job growing revenue. Okay, revenue in the last couple of years has grown on average between 30 to 38% per year. So that's good. But the problem is the net income is getting worse and worse. This past year, they lost over $1 billion on the bottom line. And as you can see, it's only been getting worse now for the last however many, 5 to 10 years. So that's a big problem. That almost makes me want to not invest in it at all, just because why would you invest in a company that is losing more and more money every single year? Unless there was, a sign that things were going to turn around really quickly, I don't see why you would do that. And then you have other problems like their shares outstanding keeps increasing, right? It's gone from 200 million just a couple of years ago to now 600 million. That also is going to push the stock down big time. And that feeds into, if they're losing a bunch of money, then they're going to have to raise more shares to raise more money. So it's just a really bad downward cycle. And until they figure out a way to get closer to profitability, which the good thing is analysts actually have them getting more profitable. I shouldn't say more profitable. I should say closer to profit or closer to break even. This year and the following year, it's expected to get a lot better. So that's the good thing. And their revenue is expected to grow 43% next year, right? So that's the other good thing. But if we're talking about investing in the company, no, I would not be interested in doing that. Like how I said, they're just losing too much money. And until they get a really good deal or until something like that happens, I would not be interested. I do think the technology is interesting. And it looks like this, let's see, this company has been around since 1997. So they've been doing this a long time, right? They've been at this a long time. But and although I think it has a future, I don't think this is the time to invest unless you want to make it a really small position, unless you were going to put in a tiny little position that you didn't care if you lost the money. But that's how I would treat this stock, as pretty much as if you're gambling at a casino or something like that, because it's just, it doesn't, just because they have potential to have this technology flourish in the future, it doesn't mean that they're going to be able to execute and reach profitability. So that means that it's not necessarily a good investment. So that is my stance on Plug Power. Thank you for watching, and I will see you in the next video.